Welcome back to Main Street Informant. In this channel, we provide information related to wealth, money, power, finance, business, and economics. In today's video, we will talk about Jeremy Grantham and his warnings of the super bubble's final act. In an investor's career, there are only a select few market events that truly count, and super bubbles rank among the most significant of them. There are very few super bubbles in history for investors to examine, yet they all share distinct characteristics, making them occurrences unlike any other. Jeremy Grantham, a British investor, is the co-founder and chief investment strategist of the Boston-based asset management company Grantham, Mayo, and Van Otterloo, or GMO. In March 2015, GMO had assets under management of more than $118 billion. By December 2020, this amount had decreased to $65 billion. From 2007 through 2010, he was an outspoken opponent of different government remedies to the global financial crisis. He was famous for predicting a number of bubbles ahead of huge crashes, including the dot-com and the 2008 crashes. Grantham suggests that the economy always looks near perfect at the peak, usually after a long economic upswing and bull market, strong GDP, low inflation, high profit margins, and low unemployment. His theory is that these super bubbles take multiple stages to break. First, the bubble forms. Second, it experiences a setback, which he believes already occurred in 2022. Third comes the bear market rally, and then finally, fundamentals deteriorate and the market crash to the low. He thinks this current super bubble is about to pop, and it will be an epic finale. He backs this up by historical data of 3 previous economic incidents, a mild one in 2000 and 2 severe ones in 1929 and 1972. To date in 2022, Grantham predicted a catastrophic sell-off during which the value of many assets, including stocks and real estate, would plummet, when he warned that a super bubble was going to burst and that stocks may fall 50% from its peak in January. Bonds, housing, and stocks are all severely overvalued and currently losing momentum in the present super bubble, which also includes a rare and deadly combination of commodities shock and Fed hawkishness. Although every cycle is distinct and different, every historical comparison indicates that the worst is yet to come. The entire world is currently preoccupied with the growth-declining effects of inflation rates and wartime challenges like the oil crunch. There are a few additional, less visible short-term issues. The long-term issues with population, resources, and climate are only becoming worse and are already starting to have an impact even in the near term. Here are some potential short-term problems. The crisis in Ukraine has made issues with food, energy, and fertilizer worse across the developing world, especially in Africa. These issues are far worse than the well-publicized energy issues in Europe. In addition, as government reduce COVID stimulus, both in the United States and internationally, we have just come out of one of the biggest periods of fiscal tightening in history. Meanwhile, these are only a handful of the ongoing issues that can have longer-lasting problems. In China and the developed world, labor is already in limited supply and will continue to be so indefinitely. Fertilizer is a second crucial resource that is lacking. Food productivity is declining due to deteriorating and eroding soil, a lack of fresh water, and pests that are growing more resilient. Another issue is that the African population increase is outpacing global economic stagnation. And lastly, the obvious effects of climate change. Never before have China, India, Europe, and North America all been affected by severe droughts, extremely high temperatures, and flames at the same time. This collectively could endanger our long-term viability. The American stock market is still extraordinarily expensive, and a surge in inflation like the one we've seen this year always reduces multiples, although this time more gradually than usual. The future is much grimmer than could have been predicted in January as a result of lockdowns in China, war in Europe, the food and energy crisis, unprecedented fiscal tightening, and other unanticipated but significant structural changes. An extensive and ongoing food and resource deficit is a worry, exacerbated by the growing effects of climate change. However, Grantham believes that the combination of the housing market, inflation, geopolitics, and energy is more catastrophic than ever. All three of these key asset classes, housing, equities, and bonds, were dangerously historically overpriced at the end of last year, making the present super bubble the most perilous combination of these elements in modern times. As in the early 1970s, we are currently experiencing a jump in inflation and a rate shock. And to make matters worse, we are experiencing a boom in commodities and energy, as we painfully saw in 1972 and 2007. And these commodity shocks have historically had a lasting negative impact on growth. It is not unexpected that consumer and corporate confidence indices are testing historic lows given all these unfavorable variables. Additionally, in the tech sector, hiring is slowing, layoffs are increasing, and CEOs are increasingly preparing for a recession. Recently, a bear market rally has occurred. The bear market rallies that marked the middle phase of deflating super bubbles, which is exactly in line with its three historical bubble cycles. Grantham acknowledged that every cycle is unique and every government response is very unpredictable. However, if history repeats, he believes we are going to experience tragic moves in the market. As usual, if you learned something valuable, please make sure to like, subscribe, and hit the notification bell for more contents like this. You can check out more videos on the channel and share. See you in the next one.